Hello and welcome to Invest to the Moon, where I share my insights and analysis on various topics related to energy markets. In this video, I will talk about the natural gas forecast for 2023 last week of April 2023. If you are interested in learning more about natural gas and its role in the global energy transition, please subscribe to my channel and hit the bell icon to get notified of new videos. Natural gas is one of the most widely used fuels in the world, especially for electricity generation, heating, and industrial processes. It is also a key component of the energy transition, as it can help reduce greenhouse gas emissions by replacing coal and oil in some sectors. In this video, I will discuss some of the main drivers and trends that will shape the natural gas market and what they mean for natural gas prices and consumers. First, let's take a look at the demand-related news. U.S. natural gas futures rose by 1% on Monday due to colder weather forecasts and higher heating demand in the upcoming week. Meteorologists predict colder weather through May 4 in the lower 48 states, with a return to near-normal conditions from May 5 to 9. As the weather gets warmer, Refinitiv predicts a slide in U.S. gas demand, including exports, from 99.8 BCFD this week to 94.5 BCFD next week, which is higher than their previous forecast. This shows that U.S. natural gas demand is still sensitive to weather variations, especially during the shoulder seasons when heating and cooling needs are not as high as in winter or summer. However, weather is not the only factor that affects natural gas demand. One of the most important drivers of natural gas demand in recent years has been the growth of liquefied natural gas exports from the U.S. to other regions, especially Europe and Asia. According to the U.S. Energy Information Administration, EIA, U.S. LNG exports averaged a record high of 9.76 BCFD in 2021, up from 6.55 BCFD in 2020. This was mainly driven by strong demand from Europe and Asia, where natural gas prices soared due to tight supply conditions and cold weather. The EIA expects U.S. LNG exports to average 10.85 BCFD in 2022 and 12.33 BCFD in 2023, with facilities operating near capacity to meet demand from Europe and Asia. However, U.S. LNG exports are not guaranteed to remain high in the future. They depend on several factors, such as global natural gas prices, production costs, transportation costs, contractual arrangements, regulatory approvals, and geopolitical risks. For example, data from Refinitiv indicates that the rise in gas flows to the 7 biggest U.S. LNG export plants in April has raised concerns that low gas prices in Europe and Asia could cause U.S. LNG exporters to cancel cargoes. Another factor that could affect U.S. LNG exports is the competition from other LNG suppliers, such as Qatar, Australia, Russia, Canada, Mozambique, and Nigeria. These countries have large natural gas reserves and are expanding their LNG production capacity to capture a larger share of the global market. Now let's move on to supply-related news. The gas flow to U.S. LNG export plants remained on track to hit a record high in April, causing an increase in prices. However, this was not enough to offset the decline in domestic production due to pipeline maintenance in West Texas and the Northeast. Dry natural gas production averaged 101.6 billion cubic feet per day, BCFD, in the United States during 1Q23, up 1.4% from 4Q22. However, this growth was mainly driven by associated natural gas production from the Permian Basin and production from the Haynesville region, which established new records in early 2023. Associated natural gas is natural gas that is produced along with oil from the same reservoir. The EIA expects U.S. natural gas production to average 100.9 BCFD for 2023, 3% more than in 2022. For example, if natural gas prices were to increase by more than the EIA forecast, it could stimulate more production, especially from shale gas plays that have lower break-even costs. Alternatively, if natural gas prices were to decline by more than the EIA forecast, it could discourage production, especially from associated natural gas wells that have higher break-even costs. Another factor that could affect U.S. natural gas production is the competition from renewable energy sources, such as wind and solar. These sources are becoming more cost-competitive and reliable, and are supported by federal and state policies that aim to reduce greenhouse gas emissions and promote clean energy. According to the EIA, renewable energy sources will account for 23% of U.S. electricity generation in 2023, up from 21% in 2022. This could reduce the demand for natural gas-fired power plants, which are the largest consumers of natural gas in the U.S. Based on these supply-demand developments, natural gas prices are expected to remain volatile in the short term due to conflicting supply and demand factors. While colder weather forecasts and higher heating demand are expected to support prices in the near term, lower domestic production and higher LNG exports are expected to put upward pressure on prices in the longer term. Technical analysis shows that natural gas is trading on the weak side of its daily pivot at $2.353, but it is above the nearest support at $1.904. The long-term technicals are bearish, but the short-term outlook indicates a developing upside bias. In conclusion, the natural gas market is influenced by a complex interplay of supply and demand factors, as well as geopolitical and environmental factors. As a result, natural gas prices are likely to fluctuate significantly in 2023 and beyond, affecting both producers and consumers of natural gas. Thank you for watching this video. I hope you found it informative and interesting. If you did, please give it a thumbs up. And don't forget to subscribe to my channel and hit the bell icon to get notified of new videos. Thank you for watching and happy investing.